All right, before I get started here, come over to ztrades.net, check out the terms and conditions page, read it, as well as their disclaimer, and agree to it. If you do agree to it, join the Discord and feel free to continue watching this video. Let's take a look at this. I had discussed this briefly in the Discord and why I'm going to be taking profits on some stuff tomorrow before elections. Not because I'm scared of if this person gets in, the market's going to drop. If that person gets in, the market's going to drop. The market's going to drop. It's happening. I'm not saying immediately. I think it's just time. We hiked interest rates over here. Then we cut them in 2000 and had the dot-com crash. Yeah, 9/11 didn't help that as well. But that had already started happening. This isn't a stock chart. This is the Fed rate. But you're noticing there was a drop in the Fed rate, and in 08, 2007 actually, before there was a financial crisis, the dot-com crash, the 2008 financial crisis, we started cutting interest rates in August. I think it was August. They may have just been talking about it and started to drop off. You know how it'll do that. And we started to drop. Fed rates started to drop in 2007. What happened in 2008? It got pulverized. We left it at basically nothing. They started hiking under Trump, and things were still doing pretty well. We had insane inflation due to COVID, so we hiked interest rates. Notice, we hiked interest rates, we hiked interest rates, we hiked interest rates, we cut interest rates, dot-com crash, we cut interest rates, 2008 financial crisis. What are we doing right now? We're literally in the process of cutting them. We're cutting 0.25 next week, and we're cutting 0.25 in December. We're going to do another point cut this year. Let's take a look at every single time we've crashed. Now, this doesn't count, right? Because we cut rates and we were fine. Everything boomed. We didn't raise interest rates due to bad reasons because inflation was roaring. None of that. Numbers were 1.9 was the inflation rate towards the end of Trump being in. We cut interest rates because we dropped due to a pandemic, right? And everything was already bottomed, right? Everything was very high right here. The stock market was. And then we cut and it dropped. The stock market was very high in 2007. It's the same level as it was in the dot-com crash. Then we cut and the market crashed. All right. Over here, the stock market was low and we cut. And it was fine before and we ripped. Over here, the stock market's high. So you see the comparison? This is the only time, or you see the dots I'm connecting here. This is the only time that the stock market was low. And this is not the stock market. Again, this is the Fed rate, which was the COVID crash. And then we cut rates. Right, stock market was high here. Then we cut, we crashed. Stock market was high here. We cut, then we crash. Stock market is extremely high right now. We're overbought on the monthly, on the RSI, on SPY, which is it takes a lot to get it up there. We're very high right now, and we're cutting. Just based off that, just not looking at anything else going on, like the unrealized losses. That banks have. In the article I'm writing, I think it was, what was it? I have it written down here. It is, I think it's 7 times higher than the unrealized losses and some of the losses that we had in 2008. Unrealized losses. Whatever, you can read in the article. I researched it. I wrote it down. I'm not going to spend time reading it on this video. This is really bad, and it shadows 08. Now, I'm suspecting that they're not going to realize those losses if they do. If we kind of bail them out behind the scenes and they don't, what are they going to do? How are they going to go about it? Every crisis is shorter and shorter because they know how to deal with it better. It's not like the 1987 crash where they're blowing the dust off books, reading about the railroad stock bubble in the 1880s and the crash of when we declared World War I, then we had a 1929 crash. It wasn't like that where they're like, what do we do? Now they know what to do, and they may do things a little bit differently. We'll see. We'll see how they handle this. But again, they didn't want to realize these gains. If they realize those gains and banks got hit hard and the market tumbled before elections, there's no way that the current administration would be able to pass that torch on, that baton on. Wouldn't work. The opposite side would happen. They're kicking the can up the hill to whoever's going to be in next. And it is kind of good for that to, all the issues to happen right off the bat at the front end of the presidency instead of the back end when there's elections and they're kicking the can up the hill. But there's a lot of cans that are being kicked up the hill right over to the next president, whoever's going to be in. Whoever's in, it's going to drop, in my opinion. Look for a red January. Usually that's an indication we're going to be red that year. But this is looking sketchy. And, you know, I'm up a boatload. I called this right here. Look at this beautiful reversal with the bodies getting smaller. This wick higher than that one. I called Palantir right there. I had actually bought somewhere over in here as well. So I'm going to be taking profits on that. I'm up like 100 and I'm up a lot. I'm up a bunch on Palantir. UPST. She's just getting started. I'm going to take some of those gains. MSTR. I'm going to take some of those gains as well. I called MSTR before the split. I got in that right around over in here. I'm going to take some profits on that. I hate to say it. I may take some profits here on NVIDIA. I'm going to go ahead and do that tomorrow. I'm going to take some profits on probably about half of my NVIDIA, and I'll leave the rest in. I'd love to see us. Look at the RSI, guys. Are you kidding me right now? Are you freaking serious? Look at this. Look at the RSI. Those of you who know how to chart, are you kidding me? I'm good. I'm out. I'm out. I don't care if it starts running higher. I am out tomorrow. It's freaking heading down. That RSI is weak. I'm out. I'm good. Let's take a look at NVIDIA on the monthly. I'm just going to kind of chart live here. This is a fantastic pop here. Look at the freaking monthly. Am I on a monthly? I'm on a monthly. Look at this on NVIDIA. RSI is cooked right now. It is up there. Although, in NVIDIA's defense, it's a fantastic stock and it runs up. So if it's constantly running up, it's going to stay cooked. Just because it's red doesn't mean it's a sell. I'm not selling because of that reason. If it wasn't due to the other reasons that I just discussed and that I'm still getting into, I wouldn't care if it dropped. I'd ignore it. Doesn't matter. I'm trying to hold it. I'm trying to hold it at for life, but I didn't buy it during a crash. If I buy it during a crash, I will hold those positions forever. When it comes to equities, like if you bought right there, what the heck is the point of selling up here? You got in so low. What else? AVGO. I'm going to be taking profits on that tomorrow. AVGO has performed very well. What else? So MSTR, NVIDIA, AVGO, Palantir, Upstart. I'm going to cut about half of that. And I'm going to figure out what type of short positions I'm going to build here. I may straight up just short SPY. I could short SPXL. SPXL seems like a fantastic short. The dead giveaway here as well, guys, that now we could drop and then pop back. We could drop after elections and pop up and have a good December. Could absolutely happen. But at some point, I feel like things are going to give way. If not, well, I already have whopping positions in crypto, whopping positions in metals, a decent position in bonds that are getting smoked, but I've been researching what the heck is going on there, which is what I'm about to get to. The dollar is telling me right now, this is UUP, this isn't necessarily the dollar. Dollar is telling me right now that it doesn't believe we're out of the woods. So I don't know what that's going to be. If CPI starts coming in really hot, over the next couple months, that's not good, because it's going to be like, okay, so inflation's not under control, which like I've been saying before we even started hiking, that this wasn't going to do it. The amount of uncertainty in the market with no light at the end of the tunnel, the market likes a light at the end of the tunnel. They don't care if everything's burning and on fire. If we know in 3 days it's not, the market will start reacting prior. If that happens with inflation, everyone's going to be like, what? I'm out. What? I don't know. There's no light at the end of the tunnel, which would lead to a disaster. if we did have a 2000, honestly, that's kind of what needs to happen, but a shorter one. You know, a good 4 to 6 month period of a absolute collapse, housing, everything. And then if we get Orange Man in, then cost of energy drops on top of everything else. You know, CPI reports would start coming in a lot better. And from there, what are they going to do if there's a gigantic collapse? All those rate cuts that they plan till 2026, I'm trying to get into the camera here, they will compress them into like 2 Fed meetings, 2, maybe 3. Instead of cutting rates to the end of 2026, well, they're going to compress that to 2 to 3 months, right? From there, that would be a bottom, in my opinion. Don't fight the Fed. Go with them. Now, that doesn't mean that the second they start cutting interest rates more aggressive, I'm going to get in. I'm going to calm down. I'm going to sit back. Let's take a look at, before I come back to bonds here, why am I always all over the place? I can't just finish. I'm so ADD. Look at the .com. RSI was nice and juicy for a while. We cut, let's take a look at the federal funds rate here. Right over here in December of 2000. We were cutting all the way till April of 2022. Right, let's take a look at that. We kept cutting to April 2022. Let's zoom in on this a bit. December right there. We started cutting interest rates. Right. And we kept cutting till 2004, and it started to bottom. But we dropped quite a bit. We were red hot on the RSI over here, and we actually saw oversold. I mean, we had 9/11 guys, and we're declaring war and all this stuff, so that's kind of a given. And you thought you were out of the woods, and then we double topped almost a decade later and couldn't even break it, and then drop lower. Can you imagine? Can you imagine being in it? And then we went lower than the .com. At that point, you're like, I'm out. I can't do this anymore. I'm good. I'm going to invest in debt or something. Private debt. I'm out of this crap. And then we had that giant explosion. 2008, we started cutting in August 2007. Finished in February of 2009, it looked like. Or right around there. So, yeah, right around here, we started to cut interest rates. And we had, looks like we had a 3-month rally. And where did I say that it ended? Right around December of 2008. Let's go back over here again. December of 2008, right here. That's when we stopped cutting. And that was pretty much the bottom right there. We had the stimulus to bail all the banks out, and that's what really it's the rate. It's not just the rate cuts. It's then the government injecting liquidity. That's what ends up doing it, right? And that was the bottom. So if something catastrophic happens, guys, we have the playbook of .com, which was really unique, 2008, which wasn't unique, and COVID, right? Which the situation it was unique, but the way they handled it wasn't. It was similar to 08, and they had 08's playbook, and they knew exactly what to do, and it did work. Right? Interest rate hikes, market drop, anticipation of cuts. It's going to be a sell the news event, in my opinion, even though we already know rate cuts are here. RSI is finally getting nice and toasty. You see it? Just like over in here. We're going to come down just like we did last time. We dropped last elections like a week prior, and we're right on cue. But we could pop back up after and sell off. We don't know. It's going to be a coin toss. Let's take a look at a weekly here, weekly chart on SPY. I've removed the indicators so that we can chart this better. No, I'm not going to sell everything, but I am going to start taking profits. Right? You can't just sell everything when it's a loss and you don't think it's going to turn around and then never take any profits. You can't do that. That doesn't look good on SPY there. Would I be shocked if we broke out and went higher? No, I wouldn't. I really wouldn't. Look at the power behind this. But this looks awful right now. Let's go ahead and extend this to the right. We're also on the brink of World War III. After elections, nothing matters anymore. You know, hey, you guys can resume, right? You guys can resume. We don't want it to look bad for elections. I'm not just saying any president would do that, would want it to play out like that. This isn't drawn correctly, and I can't drag it and drop it and mess it around like I'm on TrendSpider, but you know what the gist is here, right? We really need to start breaking below that body right here before I really think that we're going to start continuing down. We're actually down a lot after hours with Microsoft and Meta's earnings. So we could come down quite a bit. You know what? I'm curious to see if there's any gaps. There is not. There is right there. There's a gap right there. There's another one there and there. I don't think that's going to happen anytime soon. If that happened, that would just be catastrophic, an $80 move. Although $80 on 500 is not the same as when we were at, remember when we were at 280 on SPY like 5 seconds ago? Back in 2018, 2017, and those times, that would be a big move. That's almost 1/3 the stock price, right? 580 to 50, where this is right here, is not a lot. 506. It is a lot, but it's not like, you know, comparable to that. This doesn't look good. I don't like what's going on with bonds. They look like they're going to, that looks bullish right there. But on the weekly, you know, I was hoping we're holding. It looks like we are going to hold. Maybe. I really don't like how this is set up right now. I really do not. Looks like we did somewhat bottom. If this is going to be inflation that's going to go ahead and the underlying issues that we have that have not been resolved, rate cuts just don't fix that. You know, if it's banks not, you know, with it's all the unrealized losses with banks, if it's World War III, which would then cause bonds to go lower, or if inflation isn't under control, which World War III with other countries, even excluding us, would lead to CPI coming in roasting hot because they're going to blow each other's energy sites up, and that's how they have centralized economies. Oil would end up shooting to $300 a barrel, maybe even more. Gold's indicating something like this is going to happen. It's going up with the dollar. We just hit another all-time high today. It's going up with the dollar exploding. The dollar has exploded. Look at this. Look at this gigantic explosion here. For how many days? Like a month? And then gold's gone with it? It's like a bulldozer in first gear right now. There's been no God candles out of this. But this is just insanity. This is just crazy. So what is this telling me? The dollar's going up. Bonds are not going up. They're going down, claiming that they don't believe inflation is under control. So, I mean, we've had a huge move here. This was a 1, 2, 3. Maybe it's a fluke. Maybe it's a fluke, just like here. 1, 2, 3 reversal, and we had a pop up and came down. Maybe. But maybe it's not. We'll see. We did hit a resistance, somewhat of a trend line, although it broke it. You all saw that on TLT. We could look at it on TrendSpider as well and see if it's the same thing. I may save that for another video. But from what the 10-year is saying, the 10-year is flagging on top of that. It's saying that it doesn't believe that we're out of the woods yet on inflation. And gold's ripping. Why? You know, I guess it's pricing in the fact that we have QE ahead of us, but then why isn't Dixie doing that? You know what I mean? That's something I'm curious to find out. So, I will be taking some profits. No need to be scared. I'm still going to be holding on to a lot of stuff. I'm still holding on to my crypto. Again, look at this. This is the Fed rate. Every time we hike, then cut. Every time we hiked, then cut. We've fallen every time. We could stay hot in the market for another 6 months, right? I could be wrong. It may not be, you know, another 3 months and then we fall, but things are starting to break and crack, and institutions are selling right now, and it's looking like, and retail isn't buying like they were. Kathy Wood somehow just had the cojones to buy our Meta right now before earnings at this level. Where were you at 88 bucks? Anyways, if you guys like this content, please make sure to like and follow for more. There's one more thing I wanted to say, guys. One last thing, which would be Bitcoin. If this is one more point that I'm going to make, and this cup and handle is awesome. If there is some type of financial crisis soon, if it's in 6 months, it doesn't matter because I'll already be out of this. If there's some type of financial crisis real soon, well, and Bitcoin goes with it all the way, let's say it went down to like 29 grand or like 40 grand or 35, they're going to be cutting interest rates like mad coming out of that, which would cause this to soar. If it happens in the next year or so, that's right in the middle of when Bitcoin should be running. It would go parabolic. When? Just like COVID. COVID was a bit different because we tanked prior, dropped all the way down to 3,200. I watched that happen live prior to the halving. Then we had the halving, which is indicated right here, and liquidity injections, interest rates just lever all the way, pedal to the metal, interest rates dropping to extreme lows, and it happened before. It happening in the middle, it's going to be tough to navigate, but I'm going to figure it out in the middle of it. Right now I'm holding metals, I'm holding crypto, I'm in bonds, I'm break even on one account, a little bit red on another. I'm in some equities, cutting some equities tomorrow. I'm going to be focusing on metals, bonds, and crypto going forward here. Possible short position. I may start building it when the time is right on SPXL. It's a 2x or 3x leverage S&P 500 fund. Again, if you guys like this content, make sure to like and follow for more.